All right, so today we're taking a deep dive into Plug Power, a name that might ring a bell, particularly if you were around during the dot-com boom and bust.
Yeah, it's one of those companies that's had a really wild ride, and I think looking back at them can teach us a lot about investing, but also about how markets react to emerging technologies.
For sure. And, personally, I was curious about the long-term viability of green energy companies like Plug Power because their stock has been so up and down.
Totally. And I think it's worth revisiting them now because we've got some interesting data points and some recent developments that paint a more nuanced picture.
So just to set the stage for everyone, Plug Power was founded back in 1999, and after a reverse split-adjusted IPO, their stock just exploded during that dot-com frenzy.
Right. It was really a time of immense optimism, and the idea of hydrogen energy was so new and exciting that I think people got a little bit carried away.
To say the least, because get this, their stock hit a peak of $4,498 a share on March 10th in the year 2000.
Wow, that is just mind-blowing when you think about it now.
It's almost hard to comprehend. And then, of course, a bubble burst. And Plug Power stock didn't just fall, it completely crashed, plummeted more than 99% from that peak.
Ouch. Yeah, that's a tough pill to swallow for any investor.
Just imagine, if you had put $10,000 into Plug Power at its peak, you'd be left with about $11 today.
$11? That's incredible.
Yeah, it really makes you wonder if there's anything left to salvage from a company with such a dramatic fall from grace.
Well, that's what we're here to figure out, right? Is there any reason to be optimistic about Plug Power in 2025, or is it just a cautionary tale from a bygone era?
And to help us answer that question, we're going to be looking at an article from The Motley Fool, which suggests there might be one simple reason to consider Plug Power now, despite all of its past struggles.
So let's dive into this simple reason, shall we?
Let's do it. The article points to insider buying activity as a potential signal of optimism. What exactly does that mean?
Insider buying is when the people who run the company, the executives and directors, put their own money into the stock by purchasing shares. It's a signal that they believe the stock is undervalued and likely to go up in the future.
Interesting. So what kind of insider buying are we seeing at Plug Power?
Well, over the last 12 months, Plug Power's insiders have purchased a net total of over 2 million shares. They bought 2.22 million and only sold 183,733.
That seems pretty substantial.
It is, and if we look even closer at just the last 3 months, they bought 84,775 shares with no sales during that period.
Okay, so the trend seems to be accelerating, but the article also mentions that this buying represents a small fraction of the total outstanding shares.
Right. With over 925 million shares outstanding, this insider buying is still relatively small. But the key takeaway here is the trend itself. When insiders are consistently buying more than they're selling, it's a strong indication that they believe the stock is headed in the right direction.
So essentially, they're putting their money where their mouth is.
Exactly. They have more information about the company's prospects than the average investor, and they're willing to bet their own money on it. That's a good sign.
So if the insiders are feeling bullish, what's fueling that optimism? What does Plug Power have going for it in the market today?
Well, despite all the challenges, Plug Power is still a leader in the hydrogen fuel cell and charging market. It's a young market for sure, but it has enormous potential as the world transitions to cleaner energy.
So they're in the right space at the right time.
Potentially. And the article highlights some impressive achievements. They are currently the world's largest buyer of liquid hydrogen. They've deployed over 69,000 fuel cell systems, and they operate around 250 fueling stations.
Those are some impressive numbers. And they've also managed to secure some pretty big-name customers, right?
Absolutely. They've got companies like Amazon and Walmart using their technology. And here's another interesting point. Both of these companies hold warrants to purchase Plug Power stock in the future.
Warrants meaning they have the option to buy shares at a certain price.
Exactly. And the fact that these major players are willing to hold these warrants suggests a level of confidence in Plug Power's long-term prospects.
It seems like they're betting on Plug Power being a key player in the future of their own operations.
It does appear that way.
Okay, so Plug Power has market leadership, key customer relationships, and a foothold in a potentially massive industry. But as we all know, the last few years haven't been easy for them. What kind of headwinds have they been facing?
Well, the last 3 years have been particularly challenging for Plug Power. Their growth has slowed down significantly, and their financial losses have been widening.
Can you elaborate on that a bit? What factors have contributed to this slowdown?
Several factors have played a role. We've seen rising inflation, increasing interest rates, and other macroeconomic headwinds that have made large-scale, capital-intensive hydrogen projects less attractive.
So the broader economic environment has definitely not been in their favor.
Not at all. And this has impacted their financials as well. Let's take a look at their revenue figures.
Yeah.
In 2022, they saw a strong increase of 40%, bringing in $701 million. But that growth slowed down considerably in 2023 to 27%, with revenue reaching $891 million. And then in 2024, they actually saw a contraction, with revenue dropping by 29% to $629 million.
So after a period of growth, they took a step back.
Yeah, and the bigger concern is the trend in their net losses. In 2022, they reported a net loss of $724 million, which ballooned to $1.37 billion in 2023, and then widened even further to a whopping $2.1 billion in 2024.
Wow, those are some serious losses.
Definitely not sustainable in the long run. And to make matters even more precarious, their cash reserves at the end of 2024 were pretty thin. They only had $206 million in unrestricted cash and equivalents.
Yikes. That puts their recent loan guarantee from the Department of Energy into perspective.
Absolutely. That $1.66 billion loan guarantee, which they finalized in January of this year, is a lifeline. It gives them much-needed breathing room and the resources to attempt a turnaround.
So what's their plan for using this loan and getting back on track? They mentioned something called Project Quantum Leap, right?
Right. Project Quantum Leap is Plug Power's comprehensive restructuring plan with a focus on reducing annual costs. They're aiming for savings in the range of $150 million to $200 million, starting in 2025.
And how exactly do they plan to achieve these cost savings?
The plan involves several key components, including workforce reductions, facility consolidations, sale-leaseback deals for some of their assets, and tighter controls on discretionary spending across the board.
So a pretty aggressive approach to streamlining their operations.
It is. They're also working on operational improvements to reduce their stack and system costs and to improve the overall efficiency of their hydrogen production and distribution network.
So they're tackling the issue from multiple angles.
And their ultimate goal is to become profitable. They want to achieve a positive gross margin in 2025, a positive operating margin by 2027, and their first net profit by the end of 2028.
Those are some ambitious targets, given their recent performance.
They are. But remember those insiders who are buying up shares. They seem to believe that these goals are achievable, especially with the help of that DOE loan.
So their actions are speaking louder than words in this case.
That's one way to look at it.
Now, looking ahead, what are analysts predicting for Plug Power's near-term performance?
Well, for 2025, the consensus estimate is that they'll see a 12% increase in revenue, bringing it to $707 million. They also expect the net losses to narrow to $602 million.
So still a ways to go, but a potential step in the right direction.
Exactly. But it's important to remember that these are just projections, and a lot depends on factors outside of their control. The macroeconomic environment needs to stabilize, and demand for hydrogen solutions needs to pick up.
So there's still plenty of risks involved.
There are. And the article also highlights the potential for disruption from unpredictable trade policies and tariffs.
All right, that's always a wild card, especially in a global industry like energy.
Absolutely. And what about their valuation? Does the current stock price make sense?
Well, their enterprise value is currently around $2.4 billion. And based on that 2025 revenue forecast of $707 million, their price-to-sales ratio comes out to about 3.
That might not seem too unreasonable on the surface, especially for a company in a high-growth sector.
Sure.
But there's another important factor to consider: dilution.
Right, the ever-increasing number of outstanding shares.
Over the past 5 years, Plug Power has increased its outstanding shares by a staggering 188%, mostly through secondary offerings and stock-based compensation.
So even if the company does well, existing shareholders might see their returns diluted by this increase in shares.
Exactly. It's something to keep in mind when evaluating their stock.
Okay, so bringing it all together, what's the final verdict on Plug Power? Is the insider buying a strong enough signal to warrant an investment?
Well, the article makes it clear that Plug Power is still a very speculative investment. There's a lot of potential upside, but the risks are significant. They've got a history of losses, they're operating in a volatile market, and their share count keeps increasing.
So the insider buying is intriguing, but it's not a guarantee of success by any means.
Precisely. It's just one data point to consider among many. It's a sign that the people running the company believe in its future, but that belief needs to be backed up by tangible results.
So essentially, do your own research, understand the risks, and don't go all in based on one simple reason.
Exactly.
Well, that's been a fascinating deep dive into the world of Plug Power, a company with a roller coaster past and a future that's still very much uncertain.
Definitely a story worth following to see if they can pull off this ambitious turnaround.
And it raises some bigger questions about the future of green hydrogen as a whole.
Right. What other indicators beyond insider buying should we be looking at to gauge the viability of this industry?
What are the technological breakthroughs, the regulatory changes, and the market trends that will ultimately determine the winners and losers in the race to a cleaner energy future?
Those are the questions we need to be asking ourselves as investors and as citizens concerned about the planet.
Absolutely. Some food for thought as we wrap up this deep dive. Thanks for joining us today.
It's been a pleasure.
We'll catch you next time.